how are you? So we are in the, is this the third week or the second? I think it's the 1, 2, 3, 4, the fourth week of June. So we have 1 week to go. Once again, I'm just going to do a quick recap of what you expect the market to head this week. And basically, I'll just do gold, GBP, AUD, and Euro GBP. So for me, these are my favorite pairs that I trade. Mostly, I trade gold because of its volatility. I also trade GBP AUD because of its volume. I This is one pair that I've traded for the better part of this year after I realized that it is it is also volatile and it moves more volume in both markets more than GBP JPY. I used to trade GBP, JPY, and gold. And then because I have 2 or 3 people that are part of my team that trade Euro GBP, so these are the pairs that I trade. So I'll just do a quick recap. We'll start looking at both pairs from the daily. GBP AUD hasn't moved that much on the daily. If you check, it moved from that to here, and you can see I already have on my charts a Fibonacci retracement, and it moved from that point up down, and right now it's trying to go back and consolidate and go back to point 100. So for me, I'm waiting until it breaks structure. That's why I have this here. It breaks structure before I can get into a trade, and even if it breaks structure, we have this important market gap here. I think you can see this candle and that candle, and this candle, there's a market gap. So I might get in immediately. It goes through this, it breaks this structure, or when it's halfway on this market gap, I might get into it into a buy, and I'll get out from that level. But remember, that's the daily. Personally, I trade from a 4-hour time frame because I am a swing trader. So from a 4-hour time frame, there are a few opportunities I can see for the short term. There's liquidity level here. This is where they left the markets. The market makers left the market at this place when they were moving the market down. And then another thing that I can see is they also left a market imbalance up here, or a market gap. So as we go through the weeks, a few things might happen. Either these guys might push the markets all the way up to where we have the liquidity zone. I've seen another liquidity zone around here. And then we also have another market gap around just immediately lower. So you have another market gap around here. So you have the market gap and the liquidity level. So this for me are the areas that I'll be watching. We have another liquidity level around here. So as I'm trading on a 4-hour time frame, for me these are the levels that I'll be watching. And if you try to measure from that market structure all the way up to here in terms of pips, those are 553 pips. So today is the Monday, so I'm giving the market time for it to consolidate itself. Maybe I might get into a sell tomorrow or Wednesday, but to get into a trade today, it must be a very special trade for me to get into a trade today. So from the way it stands, these are the two levels on a 4-hour time frame where the market is. If I leave that, so if I was to trade this, either I'll trade up to this market level and get out, or hold my trade up to this liquidity zone. Another zone is here. So that is for GBP AUD. When you go back to Euro GBP last week did something interesting. Because look at this. You can call this, let me just add this and call it break of structure. So this is a structure. This structure on a 4-hour time frame, what it basically means that price has been respecting this trend line. That it reaches the trend line, goes back, reaches the trend line, goes back, reaches the trend line, and it's now reverting. And when you look at it from another angle, that price has also been moving down. So it's forming something sort of like a sharp triangle. I like to call this an ascending triangle. See how you look at it from that perspective. It's an ascending triangle. But we have to note one important thing, that there's a market structure here. This is the point that price reached before it came down. So but personally, I'm going to get into a buy because the market has always respected this line. So I'm assuming it will still continue respecting that line until maybe a place where this line comes in contact with that line, this is a liquidity line. Liquidity zone line comes in contact with that line. So I'll get into this for a buy and hold it until when it reaches that particular level, because price moved all the way down from, let me just say, from this level, moved all the way maybe up to, let's say somewhere here. Well, this was the lowest point. But now what the market is trying to do is it's trying to correct this move and go upwards. So that is for Euro GBP, and as I've said, for me, for Euro GBP, I'll get into a buy because I can see how the market has been moving. It goes up, it will come down, then continue going up. So I'll hold as much as I can up to 0.8720. Then lastly, we'll have a quick look at gold. Last week we had, not last week, in May we had this move. The last time I traded gold, because I haven't been on the market for a few months, not a few months, sorry, a few days. The last time I had this as my market imbalance, which was cleared, and then even this liquidity level was collected from there. So the market created a new liquidity level. You can call it there. So you have a new liquidity level there on a 4-hour time frame. Liquidity zone. So we have a 4 liquidity zone. But then we should remember that this was the highest level the price has gone for the past few days. But then it had left a market imbalance. If you go backwards up to here, that's a market imbalance. Then you also have another market imbalance. Oh, let me just delete this and draw a new one. So just delete that because we're on a 4-hour time frame. So you can just draw a new one. So this is the liquidity level. So you have a liquidity level there. I'll delete that. So I'll be looking at that keenly. That's liquidity level. We have another liquidity level around here where I put the yellow line. This structure was respected and broken. This liquidity level was collected. So if you're trading for this week, there are things we are going to look at. Personally, I won't enter within this range, but I'll wait for the market to clear all this range. Maybe I can try to enter from the market from here, because this is another liquidity zone, and then hold all the way until we reach to this upper liquidity structure. So this is also another liquidity zone. So, but as you know, gold, it's hard for you to trade on a 4-hour time frame. Normally, if I scalp my gold, but most of the scalping I do it on a 30 minutes time frame. And if you break it down to 30 minutes time frame, let's see what are the market opportunities. I can already see a few. There is a market gap here. The market will come to collect that. This is gold. Reset. Control Z. Now there's a market on gold. Yeah. So sorry about that. There's a market gap here. The market will come to clear this liquidity level, this market gap, that I can call it imbalance or market gap. And then from the downer side, There's a smaller market gap here. There, smaller market gap. Just measure it properly. There you go. There's a smaller market gap there, but then there's also a liquidity zone around this area that as the market was going up, it left that liquidity zone. And if I look at it from a 1 hour time frame, I think at the moment the market is on a downward trend. From a downward trend, what it means, the market has been moving that way. And if you can use this as a trend, and it means the price has been reaching that level and coming back. So it's trying to reach here, it failed, it's coming back. For me, I think where the market is headed for the next few days, it will come to clear this smaller imbalance, or at times the market can be so funny. They can decide to move price here, clear this market imbalance, collect the liquidity level here, and bring all the price all the way down to clear this liquidity level, this market imbalance, and they also have another market imbalance up to there, and then revert price and continue going up. So, and that's why I trade using price action, because you're just watching the way price is behaving in the market and see where the market will go. So for this, I'll just wait. Normally during the New York session, nothing much for me today. I don't think there's anything much to have a look at for me. I'll wait for the market to play itself, consolidate, and maybe try to get in tomorrow and look for either buys or sell. This is another market imbalance up there. So if these are the areas that you should look at that the market is going to try and fill. I'll just try to highlight the area number 1 here. You have a market gap there. You have this market imbalance here. This is where the market makers will try to push the market. There's another market, there's a liquidity zone there, and then there is a market gap here. So they'll try to come and fill these areas, and then lastly, on this yellow line, of which I said if I get past this yellow line, I'm coming in for a buy. This is another, I think it was a liquidity zone also. So these are areas that the market will try to fulfill this week. And I think if I move up to, let's say here, because there's another imbalance here, or up to here, there's a liquidity zone here. Those are almost around 673 pips, because there's a very good liquidity zone around this place. That one, let me just push it there. There you go. So this is also another liquidity zone that the market makers will try to come and fill. All right. Anyway, that's it for me, and see you soon. I'll do a few videos in the course of the week now that I'm free and I have a lot of time. Thank you.